Hey guys, how you doing? So, gambling is worse than drug addiction. Let me rephrase that. Gambling addiction is worse than drug addiction. A good friend of mine once said this, and I thought about it. I said, that's so true. Why is gambling addiction worse than drug addiction? Because drug addiction can take years before you go bankrupt and ruin yourself. But with gambling, you could do it within months, if half a year to a month. It could be so quick. So you got to be careful about gambling. When you invest in short-term stock market trades like GameStop, BlackBerry, AMC, this is not investing. This is gambling. In Wall Street, they call it speculation, but that's just a euphemism. That's just a nice way. It's a nice way of saying gambling. Why is it deadly? Because you can lose everything in a very short period of time. So let me give you a couple of tips about this. First of all, you don't want to be 2-day late George. 2-day late George is somebody who comes to the trade 2 days too late. It's a bit of a joke, but let's look at GameStop. The time to have gotten into GameStop was at $18 a share or $5 a share or $6 a share. As I've said in other videos, when you see the value of something spike up super quickly like this, it's not a good time to get in. It doesn't mean it won't keep going up, but when you see this rapid hyperbolic price change to the upside and to the downside, you typically see a bounce back as a result afterwards. So the faster and steeper the slope up the curve, for more chance you're going to see a reversal. So you got to be very careful with that. So you don't want to be late to that trade if you're trading. The next point, trading is generally a mug's game, as they say, a mug's game. What does this mean? Most people who trade lose money. Most people who trade. Not everybody. You hear of some of the big successes, but most who trade lose money. The people who make money in the market typically are very well diversified, and in terms they have some stocks here and some stocks there, some bonds here, and they buy index funds, et cetera, et cetera. That's where most of the money is. They spread it out to what's the word I'm looking for? Mitigate risk, to lower their risk. And finally, it's not a short-term thing. If you want to ultimately make a lot of money, you have to be in the market for a while. It's in and out, in and out, in and out. Very rarely does it result in major gains for people. I know on this channel it's more of a business entrepreneur channel, but I figured given with all the noise with Wall Street bets, GameStop, etc., I thought I would weigh into this. I don't know where I got this from. I got this from a friend of mine who got it from somewhere. But there's an expression somebody said, you don't want to be a Thanksgiving turkey. The Thanksgiving turkey is doing amazing. They're eating well, they're getting big and fat, and they're doing fantastic until Thanksgiving. Then they get slaughtered, right? Stock trading is like that as well, which is gambling. At some point in time, even if you make all kinds of gains, what tends to happen is people start upping their position. So let's say you start off and you start investing or start gambling, you start trading with, we'll say $10,000. We'll take a small number. So you start trading with $10,000. Then if you're lucky, you start having success, market's going up, all of a sudden you turn $10,000 into $30,000. Hey, I'm doing pretty good, man, I'm doing pretty good. So what happens typically, it's just the nature of our psychology, you start upping your trades. Instead of betting 5,000 on plays or 2,000 on plays, you start betting 10,000, 20,000 on plays. Inevitably, you're going to get caught, because this is the nature of the game. All of a sudden, your 30,000 gets dropped down by 50%, 60%, 80%. All of a sudden, instead of you having 30,000, you're down to 15,000, or which happens very often, below the figure that you started with. So maybe you started with 10 grand, you went up to 30, you started gambling bigger because you've been pretty confident, because you've been lucky. All of a sudden, boom, 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 you get hit, boom, you're down to 8,000, you're under 2,000 bucks. You've done all kinds of work over several months, been trading and studying, and you're on the forums, and you're listening to all these other young people talk about how you're going to make so much money and blah, 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 blah. And then after all that work, you end up losing a couple grand. And maybe you're up a little bit. On the other hand, if you just bought the index funds, chances are you'd be up like, 4 or 5% over half a year, something like this, with no work, no headaches, right? So you've made $500-600, but you've done nothing. You've done no work, right? So over time, as you build up that stash of cash that you have invested in index funds and so forth, what happens, and all of a sudden it becomes 100,000, 200,000, 500,000, a million, etc. It builds up over time, and it's passive. So you can work on your job, on your business, and you don't have to worry about all this trading nonsense, which is pretty high stress for a lot of people. I'm not a financial advisor. I'm not telling you what to do because I don't know your personal situation. These are just what I would do and what I've noticed the successful people in the stock market do. It's about investment, which is putting positions for long term as opposed to short term. Remember, short term trading is very emotional. It's driven by emotional whipsaws. That's why it's so dramatic and it shifts so quickly because it's emotionally driven on the short term. On the long term, is fundamentally driven. So fundamentals are steady, stable, typically, but you have to have patience and let these fundamentals realize themselves over time. Anyway, that's it for this video. I hope it helps. Now that this madness is sort of subsiding with regards to GME, the GameStop, BB, and other stocks, it may whipsaw. I'm sure it will. I'm going to go back in the subsequent videos more on business entrepreneur skill sets rather than market, just talking about the market. All right. I hope that helps. Bye-bye.